Welcome, everyone. This is David Jaffe, and I'm here with a special guest, Jim. Jim, can you please take a moment to introduce yourself?
Sure thing. My name's Jim. I'm a option trader, but I also have a YouTube channel called Simple Option Trading, where I document my journey as I go through and um, learn more about option trading and share my experience with my audience.
And I think this is actually a special treat as well, because is this the first video that you've shown your face, or
It is. So on my YouTube channel, I mostly do, or I only do, kind of I don't want to say PowerPoint presentation, but it kind of is, right? And I never really, or haven't shown my face at all. So this will be the first time for not only your audience, but my audience as well to see who I am and what I look like.
do you think in the future that if everything goes well and you get a good response, then you might mix up the content strategy and do like the animations and the PowerPoints? Because I'm sure that you could save some time as well, and it might be more efficient to do like a talking head style video as well, right?
Oh my goodness. Yeah, you have, I mean, you know firsthand what it's like. And so just the preparation and putting them together is significant. So I hear you, and I agree. If this goes well, I'll be incorporating this as part of my repertoire for my channel.
Awesome. So why don't we start, and if you can briefly discuss your background in trading, and potentially you can touch also on some of the other strategies that you dealt on, because selling options is for many people, probably, I would say for almost everyone that I've spoken to, it wasn't the initial strategy that they started out with.
Right. Yeah. Yeah. Oh, yeah, definitely. So let's see, where do I start? I guess I should start with so I grew up in an Asian household where the mentality was, you work hard, you save money, and you never spend it. And so with that in mind, what my parents ingrained in me was kind of the saving strategy. And so I've always been from the very beginning a buy and hold investor. And so that's been my premise since the day I started working. It's always been buy and hold. When I got my corporate job, I was, you sign up for the 401k, and the idea there is you just put money in there. You just keep every time you work, you pay yourself and you throw money in there, and you're doing this buy and hold strategy. And so that's what I did, and I never really ventured from that. I've always been curious, and so I started to play around a little bit as I got older, and I figured out, hey, there's things called, you hear about forex and some of these gimmick type things. So I didn't really do that, but I did try some day trading and some swing trading, and I had basically zero success. Right? I don't want to say it's gambling, but to me it seems kind of like gambling.
Yeah.
And
I
so
mean,
I fell back to what I was comfortable with, and that's the buy and hold strategy. Um, and then maybe 2016 or so. And so I had dabbled a little bit in some options, but in 2016, things really changed for me. And I'm sure you recognize this as well. It's when the industry, I think it was 2016, they started moving to commission-free
right.
trades.
So they
And
remove the hurdles, so it makes it like more easy to kind of like explore and delve out into like different trading strategies, and without really like paying anything. So you figure, okay, I might as well try this, because in the worst case scenario, it's not really costing me anything.
right, exactly. And that was one of the things that kind of held me back, was the fact that you did have to pay a commission. Remember that we had commission trades, and it didn't matter if it was one share or 1,000 shares, right? You still had to pay the commission, and for options especially, right? It was the number of shares as well as the commission on the option itself that you had to pay. So you got hit twice. And in 2016, when they went to the commission-free structures, probably Robinhood, I think that did that first. And so the whole industry kind of swung in that direction. So that kind of opened the door for me. So I started playing around with options more. Um, I was doing some verticals, covered calls, cash secure puts, that kind of thing. But it was more of I'm just dabbling because, like I said, I grew up in buy and hold. That's what I was taught to do. So it was very narrow focused in that regard. And then in 2020, March of 2020, we had this global pandemic, and everything went out the window, right? I had left my corporate job. I was working as a consultant in my own consulting business. But in March of 2020, when COVID hit, I lost 50 to 60% of my work. It was just, the opportunity wasn't there for me to work because I had to go on site, and everybody was shutting down. So there's no way for me to work. Now, fortunately, financially, it hurt, but it didn't. I wasn't desperate, right? I had enough saved, and so I was good from that standpoint. But I missed the extra money, and so that kind of pushed me in the direction of. I remember doing option trading, and I remember that I had some success with it. I wasn't making huge dollars, and then I wasn't out there to make the get rich quick thing, but I was looking for some extra income, and so I turned to option trading as a way to supplement my income. So that was March in 2020. As I was doing this, I thought, hey, I should probably make a couple of videos, show what I'm doing. That way I can share it with my son, so that he could see what I'm doing and kind of learn from my mistakes. So I started publishing some videos. I think I started my channel in September. So it's been about a year. I think I've had my channel for about a year, maybe 13 months, I guess now. And I started to gather a following. And so I kept making it, kept feeding me, inspiring me to keep making videos. So that's basically where I started from, right? Traditional buy and hold. And then I moved into some options just out of not need so much as I wanted some extra cash. And then really focusing on option trading and publishing videos. And David, so really for me, because I was a buy and hold investor, it meant that I had a portfolio of stocks already built up. And so my foray into options, kind of like what you say, nobody starts with options, or I've never heard of anybody starting with options. My foray into it was selling covered calls. So, taking the shares I have and then writing option calls or covered calls against the underlying stocks that I had. And that was kind of my journey into the option world. So that was in September. And now here we are a year later. I still doing option trading. My work is still kind of only at 50%. So this has kind of worked out well. And I have a little bit of a following on YouTube. And so it makes it fun and interesting because it's different from what my normal day job is, kind of thing. And so I really enjoy this. And watching other YouTubers like yourself. I've seen your channel. I've seen some other channels as well, and it's very fun. And I think both of our audiences should realize that they should probably. I mean, it's good to follow a mentor, but I think it's worthwhile to at least see what some other YouTubers or option traders are doing, just to get in a sense of, hey, what else is out there, and it's a good way to pick up some new information.
Yeah, I definitely
So that
agree. Multiple heads are better than one. Although there are a lot of people out there who have bad information where in a way, it's kind of like poisonous information where you kind of alluded to it earlier, where I'm sure that you got into day trading and you tested that out because you were under the premonition that it's going to be extremely easy to make money because you see a lot of these people make money, but then when you actually trade, you find out, oh my God, I'm losing money. I have no edge. And there's actually a few scientific papers which equate day trading to playing roulette and gambling, and they show that there's actually no learning component to it. So I do 100% agree with you regarding getting information from multiple trusted sources.
Yeah. Uh-oh. Hey.
Information, it's actually worse than getting no information at all.
Yeah. So that's a good point. It's because there are some I have seen it, there's going to be good and bad in anything you do or anything that's out there. And I agree. There's some really good option traders that have YouTube channels that are very helpful. And there's also the darker side, if you will, where you could tell it's kind of
Yeah, make 600% in 5 hours or something
right.
like
Yeah.
that, you know?
Yeah. I don't know how they come up with these numbers, but I think, it's the clickbait thing, right? You see the
Yeah.
thumbnail or you read the title and you think, oh my
Yeah.
gosh, I got to do that. And so that's
it's funny because I watched I forget what the channel was, but it's extremely popular. It has like it maybe Terry Vertasium or something like that. He has like a few million subscribers, and he came out with a video saying how the click-through rate and the title of the video is so important, where he's actually going to be using more clickbait thumbnails. So I actually went back and hired like a few artists, and then started like updating my thumbnails. And I have noticed that I've increased my traffic. So that might be something that you want to consider, is go back to your old videos and and then update the thumbnails to make them better and kind of adjust the titles. You should see a pretty relatively large increase in your traffic. However, I have gotten called out a few times by my audience because the thumbnails that I'm currently using are a little bit more clickbaity. So if you are watching this, I do apologize. The content is going to stay the same. However, please realize that it is important as a content creator that we do have to pacify and feed the algorithm, because if not, then our videos are not actually going to be shown. So yeah, that's what it is. A few things that I wanted to build on prior to the next question. You mentioned commissions, which I think is amazing, because when I first started out, I was using Options House and I was paying either $8.50 or $8.95 as a like per trade that I made. Plus I was paying an incremental 50 cents per contract. So if I was selling 10 contracts, then that would be almost around $14 per transaction.
Exactly.
Now that's a lot. That's a big hurdle when you pay $14 per transaction, and then also if you close out the trade early, then you also have to pay like round trip. So it's about let's say like $8. But even if it's not, let's say it's even $20, that's still like a pretty large hurdle. Now, so Options House was acquired, I believe, by E-Trade in I think like 2017 or 2018, and then E-Trade, I believe it might have been this year, was acquired by Morgan Stanley. And they kept the same branding, but currently, and now they dropped their, there's no like upfront fee, so that $8.95 is no longer there. And now instead of paying like the $8.50 or $8.95 plus 50 cents, I only pay 10 cents a contract. So that's an enormous difference in only like 4 years, 4 to 5 years, where I went from paying like $25 for every trade with the opening and the closing, and now I'm paying like, less than $1 or something. It's a huge change. The second thing is, I found it very interesting when you mentioned where part of the impetus behind like selling options and trading and delving into different strategies was that you lost part of your income due to the pandemic. And I think that your reaction to that is actually extremely healthy, because I read a few like research studies on psychiatry, and they indicated that a loss aversion, it's about 4 times more powerful than the gains, meaning that if you lose money, you're going to feel 4 times more pain than the elation and the happiness from actually making money. So I think that from your perspective, if you were working in a professional job and then as a consultant and you saw your job, the amount of income that you were making cut in half, instead of like, for many people that would lead to like depression and sadness. And hey, honestly, I feel like a little bit of depression and sadness can act as a motivator for you getting out of your comfort zone and trying something new. The problem with that is oftentimes it can potentially lead to people developing bad habits and coping mechanisms. So I'm really glad to see that you used that and the pain from losing half your income, and now you kind of like built out like a branch that maybe a year from now, 2 years from now, 3 years from now, you're going to have additional choices and additional options to decide like how you want to spend the rest of your career. I think that's amazing.
Yeah, I definitely agree with what you just said. And to another point to that though is, when you think about people losing their jobs and maybe they did exactly what I did or very similar, where their hours got cut back or they lost their job and so they turned to the stock market. I think there's some problems where people may have been desperate. They thought they could make a quick buck.
Yep.
And maybe they turn to Forex or some of these bad YouTubers that may have these lofty goals, and they probably hurt themselves even worse because of that. So I feel fortunate. So it's worked out well for me, and so that's part of the reason I think why guys like you and I make these YouTube videos. We want to make it realistic, right? So you're not going to make I don't know. Some of these gains are just incredible. I don't know where they come up with these numbers, but I think if a person is, um, if the trader is disciplined and has some patience, they can slowly chunk away, and maybe you won't get rich overnight, but over time, you start building your skill set, and your account size gets larger and larger, and eventually, you're earning a healthy income from it. So I think it's
I think the discipline and the patience aspect is something that needs to be constantly worked on and exercised and strengthened all the time, because especially during times like now where volatility is really low, with VIX is trading at about 16. Usually when
yeah,
there's a low VIX, that means that there's a lot of complacency and the market is going up. So when you see the market going up tremendously, and you see something like Tesla, which earlier today was up like $70 after being up like 12% yesterday,
right,
and I know that it closed down today, but you see almost like a 20% gain in Tesla in like intraday in 2 days, and then you look at how much premium you're collecting when the VIX is trading at 15 or 16. That's actually a dangerous time for option sellers, because you start getting and thinking about the fear of missing out. And you think, okay, I can make more money by simply being long Tesla than I could by selling options. And I think that that's the most dangerous time for option sellers, is during times when volatility is really low. And what many new traders don't understand is that when you sell premium, you can actually make money if the market goes up, stays sideways, or even goes down. Whereas when you're long stock, your account is going to reflect the movement of the stock on a one-for-one basis. So it's much
right.
more risky. And the market doesn't always go up.
Right, I know, yeah. And I get that comment a lot, or comments and emails about, if I was just long, I would have made more money. And if you're looking back, yeah, you can always say that, go long on the stock, and people are like, oh, I'm gonna put everything in Tesla or AMC or whatever the
Or
new things.
something like that. Like,
Yeah,
yeah.
and I think it's that euphoria that takes over some of the inexperienced traders, and they end up hurting themselves. And so I'm hoping that guys like you and I can kind of educate, or at least raise awareness, right? That there's safer ways to make money.
One quick thing, which you said earlier, which I really found valuable. I think it's really important that creators like us, we don't try to engage in short-term dopamine fixes. Instead, we try to really nurture the relationship with our audience, because when you're engaging in like very risky trading, then oftentimes your audience churns. So you might have a lot of subscribers, but when people find out that they're losing money from doing this, then they no longer click on your videos, and therefore the amount of views that you get per the percentage of your total subscribers is actually lower. So I do think that subscribers can be more of like a vanity metric, but to
Sure.
nurture the relationship and really try to help out your viewers, so that you help them, so you instill them with good habits that they can use for the next 10 or 20 years. I think that over the long run, that's extremely beneficial.
Yeah,
Can you
yeah.
can you briefly talk about the changes that you've made in your strategy over like the past year or two? Because it sounds like that you got really serious about trading options, about like a year and a half ago, when you initially started with like selling covered calls, because that's a natural continuation of long stock and long equity. You figure, okay, I can make an extra, let's say 7 to 12% a year by selling covered calls. And can you walk me through like how your trading strategy has matured, or how it's changed, if at all, from selling covered calls to what it currently is?
Right. Yeah. So that's exactly right. So I started doing covered calls, and it's like I said, it's because I was a buy and holder, and I had a portfolio that was large enough where I could afford or take the risk of selling covered calls against some of my shares. And eventually, I started looking at, hey, what's the other side of the coin look like, right? So it's selling cash secured puts. And what I liked about either covered calls or cash secured puts is that, versus naked calls or naked puts, is that I better control my risk, right? So it's a way for me to, um, quantify how much I have at stake. Now, there's, nobody knows what the markets do. Any company could go bankrupt and you could lose it all. Um, but, I went from covered calls to cash secure puts, and then I started doing some verticals. And what I noticed is that um, in trading the verticals, the credit spreads or the debit spreads, it relied on being significantly more sophisticated as a trader. And what I mean by that is you have to have a lot more knowledge and technical savvy to be able to execute some of these trades.
Especially rolling a trade is like very, especially for a spread, it's very, very difficult.
Very difficult, right? And really, what I found helpful in that exact situation, David, is having a spreadsheet built to help me capture all the numbers and help me do that analysis. Because I know one or two people that could kind of do it in their head, and it's second nature for them. I'm not that guy, right? I have to have it written down, and I use the worksheet to kind of help me figure out what's good, what's bad, or what the profit and loss. And of course, there's some guessing to it, some of that risk or good luck, if you will. And so eventually, what I figured out was that the credit spreads and debit spreads weren't for me, um, especially since I was trying to, as I mentioned, I was trying to teach my son what I'm doing. And so it worked easier for him, and it spread amongst a couple of his friends. So now that I'm kind of teaching this group how to do covered calls and cash secure puts, it's actually a pretty simple strategy, and I'm sure you're fully aware of it, right? We're selling options, we're collecting premiums, and we're doing it by looking for undervalued companies, strong companies, that quality companies that are undervalued, and they have a higher potential of moving up. And so we want to take a look at that as, hey, these might be candidates for cash secure puts, right? Or covered calls, depending on the situation. But like you mentioned, I think you mentioned earlier that you also have, it's not as simple as just only looking at the stocks. You have to look at the VIX as well, and other indicators to get a sense of what the market is doing. And because it could all be gone overnight. Like remember when in March 20, go back to the COVID thing, March 2020, the VIX shot up to, I don't know,
Yeah,
80?
84. Yeah.
80? Yeah, it was crazy. I mean, who
Yeah.
could have seen that? And for that entire month of March and most of April, it was just like, what do I do? What do I
Yeah, it
do?
was like, yeah, and the crazy thing is, so the VIX spiked up in late February, and then the first week of March, it actually recaptured almost all its gains. I think at one point the S&P was about like 1.5% to 2% on like March 6th or something, and then it was like the middle 2 weeks of March where it just collapsed, and then I think the low was like March 24th or something. But like, yeah, it's just people need to remember the pain and the violence of the move in March, because you have to always protect your principal.
Oh my
And
gosh, yes.
a few things that you said. So you used the word guessing, which I just want to make clear, because I actually put out a video recently which said like the power of I don't know. And I want the viewers to recognize that when you're dealing with the market, you're dealing with an aggregation of human behavior, which is oftentimes not rational. So when we say that like we're placing a guess, that doesn't mean that we're gambling. Instead, we're placing a very high probability like trade, which might be an educated guess because it has a very high probability, but we're not gambling. So when he used the word guessing, please don't vilify him in the comments and be like, oh, like so and so, because when we're selling premium, we're engaging in very high probability trades. And the reality is that for many of the people who want just purely objective measures of trading, no, trading is also an art, knowing when to trade, when not to trade. And you're going to make mistakes. Even the best traders in the world make mistakes. So there's definitely some objectivity, and there's also some subjectiveness when
Sure.
trading.
Oh,
The
sure, yeah.
the other thing I wanted to ask you, do you remember like a bad experience that you had when you were trading cash secure, or when you were trading credit spreads or debit spreads? Can you provide a little more information on that?
Yeah, so I think so, I had somebody kind of looking over my shoulder and helping me, right? As I was trying to learn the ins and outs. And I actually, I'm trying to remember the exact setup, but it turned out that I had actually reversed, I should have sold when or I had my sell and my buy in the reverse order. And so I ended up in a bad situation. Bottom line, David, I lost probably, I don't know, a few $100s, which, and maybe in the big scheme of things, that's not that much. But for me, that's a lot of money to lose.
Yeah, like
And
burn. It's kind of like the child, like where it burns your fingers and stuff. It like leaves a bad taste in your mouth, right?
right, exactly. And so just from that incident alone, it was like, okay. And like I mentioned, it's trading credit spreads or debit spreads is very technical. You have to be fully aware and understand what the market is doing, not only from looking at the charts, but the macro and microeconomics of the world itself, right? How does how does the current administration, right, their look on the infrastructure affect the EV market or the energy market? And you kind of have to take that into account as well. And so it was just too much work for me. I wasn't looking for that to do that at the time. And I'm still not ready to do that. Maybe if I end up option trading full time, I'll go back to it. But I think it requires a dedicated individual that's willing to learn and make smaller baby steps, if you will. So if you do get burned, it's not as bad.
And when you mentioned that you'll sell covered calls and cash secured puts, and then you primarily target stocks that you believe are going to go up. If you are if you have the belief that the stocks that you're selling options are going to go up, do you then, if you're selling a cash secured put, are you more aggressive in choosing the strike price? Are you selling like at the money, or perhaps like very close to out of the money when you sell a put option? Or what's your strategy? Because you mentioned that you're usually targeting stocks that you believe are going to go up in price.
Yeah, so I like I said, I like quality companies that I think are oversold. And so I actually want to own the shares, right? So for a lot of traders, I think that do cash secure puts, they don't really want to own the shares. They're just looking to make a quick buck here or there. I think for myself, and what I try to teach is, you should never go into selling a cash secure put if you're not willing or if you don't want to own the shares. And don't do it just because it's got a juicy premium attached to it. Do it because you can get it at a good price, right? So I'm gonna try and get set the strike price at the money, probably, if I really like it. If it's a stock that I think really has some growth and potential, um, I'll set my strike prices accordingly so that by the end of expiration, I know that I've got a really good shot at acquiring those shares because, um, you know, as a buy and hold investor, holding shares is a good thing for me. And if I can get them at a discount by using a cash secure put and collecting premium along the way, that's even better. If you can find the companies that look good, yeah, I'm all for doing whatever I can to get them.
So let me walk you through a scenario, and then let me know if this is a trade that you would make, or adjust the reasoning. Adjust my thought process. So I'm thinking about like Intel, which yesterday fell tremendously. So you have like a very strong brand that's been around for, I don't know, 30 years, 25 years, whatever it is. And yesterday, I think today is what, like October 26th or something. I think Intel fell below $50.
Yeah, they dumped.
I think its 52-week low is about like $44. But yesterday it fell tremendously. I think it fell like over 10% or around there. So
Right.
in that situation, maybe yesterday or maybe today, because you want to wait to make sure that there wasn't a continuation in the sell-off, and I think that today it kind of stabilized a little bit, would you then sell, let's say, like the 50 strike put, and with an expiration of, I don't know, like 3 to 4 weeks or so, you would collect a decent amount of premium because the implied volatility in Intel right now is relatively high, given that it fell tremendously yesterday.
Yeah.
And then you would kind of hope that that position was assigned because you figured, hey, Intel is a legitimate company, has a market cap of a few $100 billion. And if I'm assigned, I can then participate in the upside of the stock, which I believe is oversold. And then if you're assigned, you will then sell call options, probably, I don't know, short dated call options so that you can sell a lot of them and ride the stock up as well. Is
Right.
that kind of like the strategy that you employ?
Yeah, so I think that's so the scenario you just painted is actually, that's almost the perfect storm, right? I think what's you can't just go by name like, Intel. I mean, you actually picked a great company to do this with. So this is a scenario that I'm actually kind of looking at. But I like the quality companies. I like to see that, they've got I think my cutoff right now, the way I have my screener set up is $2 billion market cap or larger. I want to see an average trading volume of 1.5 to 2 million shares. Um, and so that kind of gets me a good feeling. Then I look at the profile of the company as far as personnel. Um, and so what you described, right? So you're right, Intel did drop. I'm thinking it's got it normally doesn't trade in this range. When I was looking at the news, I did notice there's a couple things that I think might be questionable, but I think Intel has perfect opportunity to recover. I think this is just a blip in the road, and so I think you're right. I would sell the cash secure put with the intention and really the hope and desire that I would acquire the shares at this price, and capture that juicy premium. As far as the expiration date, yeah, I'm more of the 1 month time frame for my options. Although I was just looking at my numbers the other day. I think the average length of my option trades is somewhere around 21 days. So I'm also doing weeklies in there, obviously, because you can't get to 21 days if you're always doing monthly trades.
Yep.
But yeah,
With earnings, you can shorten it up because there's more premium and there's an immediate volatility crush after the earnings announcement as well.
yeah, exactly. And so in this scenario that you painted, I would try to get the Intel shares, and then I'd probably turn around and do the covered calls and do shorter time frames so I could get
Right. Yeah, so
to
that
ride
way
it
you can
back up.
buy it up. If you want to keep the shares, you can just roll the call option out and then increase the price of the strike.
Right. Yep. Exactly. And so one more thing, David, that I look at for companies to invest in is if they are if they pay if they pay dividends on the shares, right? So if I'm going to be holding, if I'm going to sell a cash secure put and I'm going to get assigned the shares, and if it may, worst case, I'm going to have to hold these shares for a while. If I'm going to hold them, I want to see that I can get some benefit as well. So if they're dividend paying stocks, it doesn't necessarily say yes, I'm going to do it. It's just one more uptick. It's one more reason to consider that company as one of my option trades.
Yeah, because essentially you're going to create and receive double the dividends because you're going to receive the dividend from the company and then you're going to also receive the manufacturer dividend from selling the covered calls as well. So I
Right.
think that works out well. Can you discuss, you mentioned that you like to do research. Can you discuss like what the process is for your research? And then I'll quickly tell you, and this is a point where we're going to disagree a little bit because I actually don't do like any research on the stocks, but I also have a tendency to only focus on very large cap stocks or market caps of like a few $100 billion and very strong brands. So for something like Intel, I considering that it's been around for so long and it has such an enormously large market cap, I actually wouldn't look at any of the new, maybe like out of curiosity, I would glance at the headlines and say, okay, this is why it fell. But I would just kind of assume that, okay, everything is already priced into the stock because there's so much volume and so much liquidity that's inherently built into that stock that really nothing that I'm going to read is going to help me except to satisfy the itch of curiosity. So I was very curious because it seems like you're dealing with more like some smaller cap stocks that you might consider selling options in those and more like high flyers, which makes sense because if you're going to own the stocks, then you're able to participate in a large up move as well. So can you briefly talk about like the research and what the process is
Sure.
behind the
Yeah.
stock selection?
Yeah. So my background is in engineering. So I tend to gravitate towards technology and growth type stocks. And it's only because it's a little bit easier for me to understand when I read about what the company does or what their product or services are, and I'm able, at least um, I've convinced myself that when I read about what the company does or what they produce, is that I can see what the big picture is, right? So I can see that if they're producing this widget, do I really think that's going to be valuable in the future, right? So it's you want to be kind of a technologist at that standpoint and look at, is it a valuable product or service? Do I think that it's going to be useful in the future, or does it have a place? Versus, yeah, it's a great product right now, but it's kind of a fad, maybe not fad, but it has a shorter lifespan, right? It'll reach end of life sooner. And so maybe this isn't a great play for a buy and hold, and it might be something that I look at as a quick, uh, acquire it as a cash secure put, and then turn around and sell it as a covered call, or maybe do uh, a buy right. So you actually buy the stocks and then you write the covered call immediately afterwards. So maybe I do something like that. But as far as the research, I like to look at technology type companies and look at what they're actually producing and try to fit it in with where I think that particular industry or sector is going, where, what's the bigger picture. And so right now, for example, I'm looking at 5G technology. I mean, everybody's been looking at 5G, but because of the work that I'm doing as a consultant, I have some um, additional information about where I think 5G might go and some of the uses for it. And so I can see that as being useful. And so companies that maybe deal with some of these aspects in the 5G space, I might give them a favorable nod and go, all right, I need to spend more time looking at what they're actually doing, and then finding out, you know, is it that they've actually got the technology, or are they just reselling it, right? So I see a lot of the white labeling of products and services, which is interesting in the growth space, right? So people just repackage something else and they turn around and sell it as their own. It's the OEM kind of thing.
Yeah.
Uh, and so you have to be careful with that. But for me, I need to research, is there a market? What's the technology? Does it have a future growth path? And then obviously the company profile. So I like to look at the fundamentals, right? Is it the market cap? I like to look at trading volume. I actually do look at the balance sheet and some of that. Um, I don't necessarily use that so much, but it's good to know that it's got profit. If they are making profit, do they have money in the bank? And so you look at the cash flow statements, the income statement, the balance sheet. That kind of tells you. I mean, you're a banker, or you used to be a banker, right? So you were in the
Yeah.
financial space. Yeah. So
Yeah.
it's good.
I used to be a banker, and I understand that, like, doing now. I know that when a lot of people were taking college classes, and I was as well, I was taught that for valuation purposes, we would use like DCF, like discounted cash flow, by looking at like the operating cash flow or EBIT or EBITDA. But the reality is that when you're doing investment banking, you can use the DCF or discounted cash flow as like a supporting mechanism, but almost everything is based upon comparable analysis, where you're looking at like the enterprise value to last 12 months cash flow, what they call like enterprise value to LTM EBITDA, based upon like the public comps or like the precedent transactions. But it is funny, I don't I don't look at but again, we trade like different types of companies, but I don't look at anything like. And also a lot of the now I know that the balance sheet is like a snapshot in time, but even
Right.
that is pretty historical in nature. But I guess, you can look at like the receivables and like how well they are like collecting on their sales, and the outstanding debt, the liabilities, the interest. But I remember, like, I used to, like, back when I was like a really young banker, I used to like read everything from like Motley Fool, and then I would research, and I thought that it gave me like a huge edge. And then I was working at CIBC World Markets in their industrial growth and services, and I thought that Sierra Wireless, it's a Canadian company at the time. Its symbol was like SWIR. I don't know if it still is, but they came out with like a pretty technologically advanced phone in around like 2004, 2005, and I was like, oh wow, like the market just doesn't know about this. And once this is going to be the next BlackBerry, and it's going to blow up because it's extremely technologically advanced. And then one time I actually saw the phone in the New York City subway, and I was like, oh, it just reinforces that you were right.
It's
So I bought
starting.
a lot
Yeah.
of shares of Sierra Wireless, and I lost a lot of money on it. And
Oh,
it's like, it's just difficult. Now, when you're younger, like you make mistakes, you think that you can outsmart the market. But yeah, I mean, it is what it is. Everyone has different styles. Can you how many stocks do you usually hold in like your universe or in your current portfolio? Are you holding like five? Are you holding 25? Like
oh.
how many are you usually holding?
No, I'm really simple. I think right now, I don't know where my phone's at. I think I probably have maybe 6 different companies that I'm holding right now. And what I like to do is have kind of my list of stocks that I kind of keep up to date with. It's just easier for me if I follow. I think I probably have a dozen, maybe 12 stocks that I follow.
On your watch
And
list?
yeah, watch list. There you go. Yeah, and people say I've heard comments that say, I'm too narrowly focused, right? I'm too I'm looking at this and I'm missing opportunities on the side, and I agree. I probably am, but that's just a lot more work. And uh, if you tell me um, Bristol Myers, right? BM stock symbol BMY, right? It trades between $58 and $69, and I know that, right? I don't have to do a lot of kind of like we just said, right? If something happens to Bristol Myers and it drops, I don't really have to go and look because I know it's going to be in this range,
Right.
right? But if you tell me that Sierra Wireless drops or it spikes,
Yeah, you don't
well,
know what historical trading range is, if it's a good deal now, it's like what's been going on,
right,
how the
yeah,
stock moves. I I agree with you 1000%. Actually, a lot of other people who I've interviewed, one of the primary comments that I've had for them is, it's like, dude, I think you're trading way too many underlines. And I think that having a watch list of anywhere from like 10 to 20 different underlines where you just simply get comfortable with their recent trading range, it makes it so much easier to trade because then all you have to do is log into your account, look at your watch list, look at the daily changes, and then you can say, okay, I think this is a good opportunity to sell a put. Or you think that it's over, you think that it's overbought. So you say, I think it's a good opportunity to sell a call. Or, in your case, if you're long the shares, so you say, okay, I think it's a good opportunity to be more aggressive and I think it's overbought. So I'm going to sell a relatively aggressive call option. And if it gets called away from me, no problem, because I believe, based upon my monitoring of the stock, that there'll be another opportunity to buy it back, even if it gets called away, to buy it at a lower price.
yeah,
And I think that if you're following 50 to 100 stocks, it's just overwhelming. It's
yeah,
difficult to do that. And remember that if you're following 50 to 100 stocks, not all of those stocks are the same quality. All of those stocks do not deserve your attention. So if you have a lot of positions in your account, you might have some core underlines that you feel very strongly about, like Tesla or Amazon or something like that. But then you might have like more speculative plays, which you might trade like once a year. And in my opinion, if you're only going to trade something once a year, why are you looking at it every single day? Because it's just taking up resources and cognitive brain power away that you could be allocating more towards better positions.
right, yeah. So as I think I mentioned, right? So I'm kind of overseeing or mentoring my son and a couple of his friends. They'll come to me and they'll say, "Hey, we just saw that this is, the latest whiz bang thing, right?" And it's a stock tip, right? They think it's,
You're like,
they,
yeah, I'm not really interested. And they don't,
right,
you're
but
like,
they're
oh,
all like,
make so much money from it. Like why would you ignore it? And you're like, son, I have a lot of experience, right? Sometimes it's
they're
better
all
to
like,
know.
yeah, they're all excited, and it's really, it's like you said, right? It's for me, it's this bright shiny object that catches their eye, but um, for me, it has no value to me, right? I would have to really understand what they're doing, and I just don't want to do that. I think if you do the 20, I don't know that I want to follow 20 stocks either, but 10 or 12 that I'm doing now, I think works out well. People that have 50 or 100, I don't know how they do it. Where do they find the time? I don't think they can do a quality um, research into all those companies and stay on top of it. I just don't think that. I don't think that's possible. Um, and it just makes it harder. If they are doing it, more power to them. But I think it's way too difficult.
Yeah, and your time is also incredibly valuable too, because the way that we trading it's not something like a lot of my students are able to hold a full-time job, and the more underlyings you have, the more underlyings the more attention you're going to have to allocate towards those underlyings. And I just think it's better to keep it as simple as possible. Interesting point regarding your son. I think that a lot of a lot of children, they want to be treated as if they're older than they really are, and they always want like their parents to respect them. So if you are going to tell your son that you're not interested in that, I would definitely recommend like not being dismissive of it, instead saying, hey son, like this might be a good opportunity, but it's not it's not something that I personally am interested in, and this is the reason why. Because I feel that looking back on my childhood, anytime that my dad would be like dismissive of something and not give like a logical reason for it, I would kind of like think, okay, like screw this guy. I'm gonna prove that I'm right, and I would usually end up making a bad decision just so that I could like be right, and then I was motivated by like showing him that he was wrong and I was right. Whereas if he like took the time to say, okay, like based upon like my experience, like I had this situation happen to me, and this is why I don't think it's a good idea. But if you want to do it, then no problem. Like test it out, and that way you learn from your own experience. It's much less dismissive and it's much more empathetic. So I think that
Yeah,
was a way of going about it.
yeah, I think that's a great point. And that goes for anybody, not just like my son, but anybody that I'm talking to as well. Yeah.
And so in like the 5 or 6 companies that you're currently holding, um, how many of them are like speculative, and then how many of them are companies like Facebook or Nvidia or Tesla, or like a very well established company?
Yeah. I think all I have, right? Um, I don't really have any speculative stocks right now. The last one I had, um, and it was more of a there was a challenge on my channel that I received, and they're talking about, and maybe you've seen this as well. People talk about, yeah, you've got an account that's so big. How about some of us with smaller trading accounts? We can't buy the Intels or the Bristol Myers of the world. We can't buy Apple. What do we have? We've got $10,000 in our account. What can we trade? And so one of the challenges for me was to look to see if I could find a lower price stock to trade on. And so my last one was MVS Microvision. So they're a company that is they're involved with um, like lidar, light detection and ranging kind of systems. They use them for like self-driving cars and things of that nature. They also have some optical technology that can be used for military applications. And so um, that was a speculative trade for me. I actually got burned on it, but I was able to work my way out of it, right? So I sold a cash secure put. I got I think it was like a $10 strike price, and the price actually dropped to eight something, eight and a half. So I had to sell covered calls, and the premium I collected, I used that to offset my cost basis, and eventually, and it's a long drawn out process. I mean, so if you find yourself underwater, you don't you could just throw your hands up, or better yet, don't get yourself in that position, right? Buy yourself out of it, close the contract, issue a buy to close, and if you can't get yourself out of it. But if you are stuck like I was, I turned around, I got the shares assigned to me. The price had dipped dramatically, but I turned around and used that opportunity in those shares to sell covered calls, collect premium each time I sold, and eventually work my cost basis so that I was even, and eventually got out of it. And so um, that was speculative on my part. I took the challenge from one of my viewers, and what did I learn? I learned that it didn't fall in my parameters for companies that I would look to invest in, right? So it just proves my thesis of you look for quality companies that are oversold, and that's where you make your money, and you don't make it on, you're trying to throw money at some speculative play. And there are some out there. Um, I'm just not a good guy to identify those and benefit from it. I think
I,
there's better people at it.
I definitely agree with you. I also think that if you're going to engage in more speculative plays, then the problem is that if that trade ends up getting challenged, then it's incredibly stressful. Where if you deal with a stock that you truly believe in, that you believe that it's only a matter of time until it appreciates in value and recaptures some of its former losses, then I think it's much easier, because even if you're underwater, you think, okay, I don't have a problem holding this stock. And even if I'm not receiving a significant amount of premium, then at least I'm receiving something. Because if a stock is oversold, then I do think it's important to try to be a little bit careful and choose a less aggressive call option, because typically when a stock is oversold, it has a tendency to shoot back up relatively quick, almost like a rubber band. And so that's something you don't want to get like stopped out at a price that's actually below your break-even point. But at the same time, you want to make sure that if you're selling a call option, that you're receiving enough premium to make it worthwhile. And I think that it's easier to do that, easier to be patient if you truly believe in the underlying stock and you really don't mind holding it. Whereas if it's speculative in nature, then you might, you might not act with as clear a head
Well,
as you
so
would.
let me ask you, David, how many speculative trades do you do? Typically a lot, very
It's
few.
pretty rare. It's no, like, I mean, occasion. Okay, so on my trade alerts, I have some people who have, maybe like 10, like some people do it with like sell options with like $2,000 to $5,000, because they use the trade alerts as a way of learning. So sometimes on the trade alerts, I'll sell like an occasional like Zillow or Snow,
Oh,
SNOW,
right.
or Fiverr, like FVRR, or even something like Alibaba. But I don't even consider like those stocks are kind of like speculative for me. But I know that Fiverr is probably has like a market cap, I think, of like below $10 billion. But I do like sometimes use that for like thumbnails on my YouTube channel that has like a decent brand and like brand awareness. And Zillow, I think, has a market cap of about like $15 billion. But even those stocks, they're kind of more for like educational purposes. And if I'm trading it, I'm trading like one contract or something like incredibly small. And also, those do tend to be the underlyings and the options, which tend to get challenged much more frequently than when I'm trading something like Amazon or Tesla or Facebook or JP Morgan or United Healthcare or Visa or MasterCard. And I know that MasterCard over the past like 6 weeks has been going down. But even something like that, like, if MasterCard is trading at about 330 or 340, even if my original strike were to get challenged, it's very easy for me to roll that position down in time, down and out, because it has such strong liquidity, and it's not going to
Yeah.
drop like 15% in a day. Instead, if it goes down, it has a tendency to go down like, maybe like 3% a day, or maybe like, a bad week would be like 8% in a week, but it's still not challenging my strike price. So to answer your question, it's pretty rare. And the reason is that I've gotten burned in the past from trying to hit home runs, and
Yeah.
I just don't think it's worth it. I just don't. I want to reduce stress and not try to hit home runs. And
Yeah.
similar to the example that you gave about your son, if someone comes to me with a stock, I usually am just like, yeah, like it's just not for me.
Yeah. Yeah. So then, if you were to categorize stocks that you would look at, right? So if you're using a screener, are there do you use the market cap at all as any type of screening criteria?
I don't really screen anymore, but I think that in the beginning, when I kind of like put together my initial watch list, I would look at the market cap, but I don't really use screeners, primarily because I kind of like my watch list doesn't really change much. Like maybe I'll add or remove something like once a year, but it's pretty consistent. I think the last time I updated my watch list. I added Nvidia, which was probably about like 6 months ago. And I took off McDonald's just because even though I know it's like a large cap and like very stable, I was just never trading it because there just simply wasn't enough premium available in there. So
Yeah.
that was like I barely make any changes to my watch list.
And the reason I ask is because what I noticed in my audience on my channel is that I get a lot of beginning or new traders, and they're still trying to develop their watch list. And so I get a lot of questions about, hey, what should I be screening for? And my going in position is, look for companies with a market cap of 1 billion or higher. And
Screening by market cap, if you had to choose one thing, that would probably be the best thing to do, screening by market. Because essentially, when you're screening by market cap, the market is providing you with validation that, okay, this is the valuation of the company. So we believe that, and generally, like the larger the market cap, the more liquidity it has. And when you sell options, like liquidity is king.
you bet.
So you don't want to like experience slippage. So I think that
Yeah.
if there was one factor, then it would be it would be market cap.
Okay. Very good. All right. Yeah. Yeah.
What
Yeah.
What are your thoughts on margin? And do you think that in the future you might start trading with margin, or is that not something that you're considering right now?
I'm not considering it right now, and I think it goes back to my upbringing, right? So it's work hard, save money, don't borrow money, right? Don't pay interest to somebody else to use their money. But what's so funny though is I see the value in it, right? So I know there's opportunities um, that I'm missing because I don't take advantage of it, and so I know that if I want to evolve as a trader, I really should probably look at least understanding it more, right? What are the implications of trading on margin, and how do I how do I manage the risk and fully understand that before I actually dip my toe in. And so for me, I know that I need to get a lot smarter on it. It's something that it's on my list of things to do, but right now I'm not touching it just because I know that I don't have the savvy to really take advantage of it. But I think there's opportunities there. Um, do you? I'm assuming you use margin as part of your trading strategies.
Yeah, I use margin, and um, when I was trading stock on margin, I would always like look at my account statements, and you would pay margin interest. But actually, when you're selling options, you're not paying margin interest. So it's actually beneficial in that way, where you're able to save money because you're not paying interest on the margin for when you sell options, but you are when you're selling stocks. The other thing is, I think it's really important. Um, it allows you to engage in very high probability trades where you're able to sell options that are very far out of the money. So, for example, I think Amazon right now, its 52-week high is about like 37.73 or like something like that.
Yeah.
And right now it's trading, about like 3,400. And it has earnings coming up like over the next few days. So as a result, like it has relatively high implied volatility, right? Because of the earnings announcements.
Yeah.
You could sell like one contract and at a strike price of about 27 or $2,800. And by selling it on margin, because you're not using up so much buying power, it will enable you to pick up a decent amount of premium and you would be okay with making that trade. However, if you're only selling cash secured puts, then then it's going to provide you with more motivation to be more aggressive on the strike selection. So in a way, it could be
Oh.
even a little bit more risky to someone who's not using margin, or you just simply might not make the trade because if you're not using margin, you're just looking at it, you're saying, no, there's no way that 100 shares at $2,700. I mean, that's $270,000. Who can
Yeah.
afford that for one measly contract? But if
Right.
you're selling a margin, especially if you're using something like portfolio margin, then portfolio margin, if I sold like a $2,700 put, it might reduce my buying power by like $5,000 versus on a cash secured basis. it's going to be
Right.
$270,000.
Yeah. 1 to 1
So
there, baby.
you're looking at what, like 40, like a difference, a discrepancy of about like, 45, like about 45 times. Like it's just, so I definitely think that by being able to assess probabilities and not trading too large. Now, remember, when you're using margin, you have to be more disciplined because the biggest reason that option sellers lose money when they trade on margin is that they trade too large. But I definitely think that using margin can allow you to reduce your risk because it will enable you to sell further out of the money and make trades that you wouldn't ordinarily make if you were only trading cash secured puts.
Right. Yeah. Yeah. I agree. And like I think I mentioned, is like, I know that I'm missing opportunities because I don't have, or I don't take advantage of that. But for myself, I need to educate myself more before I actually get to that point. So, maybe eventually I get to your level, is what I'm hoping, but right now, no, I'm not in margins, and it's probably
But,
better that way.
but I also definitely like the fact that if you're going to, if your goal is to get assigned, one of the major benefits of assignment is that, especially if a stock is oversold, you're able to participate in the upside on a one-for-one basis. Now, it works both ways, where if you get assigned and then the market crashes, then you're also going to participate in the downside as well. But in general, when a stock is oversold and it's a legitimate company, I think it's amazing that you're able to participate in the upside, because I can tell you from my experience, if like it's very, very rare for a trade to get challenged. And in the event that it does, I can probably say that I would be much better off had I gone long those shares and then just simply held it and then,
Uh,
and able to participate in the upside. So, I think that being flexible, and just because you have margin, it doesn't necessarily mean that you have to use it, right? Like you
right.
can enable margin on your account and then just simply just reduce your own buying power by the amount of the buying power reduction as if it was cash secured. So
Right.
yeah.
Yeah. Yeah. That's a good point. Hmm. Yeah. Like I said, it's on my list. I think if I get smarter, I can start taking advantage of it. And I think you're right. There's opportunities that, because I'm not trading on margin, I am missing out on certain things.
Yeah, I
Hmm.
mean, maybe I do think that for a lot of people, especially when they're not disciplined and patient, margin actually ends up hurting them more than it helps them. But I do think that if traders are disciplined and patient, then it can help. It's like a double-edged sword. I if you're watching this and you don't have margin, I don't want you to feel like you're missing out. That's not the goal of what I was saying. But I just want you to potentially consider, and if you've heard negative things about margin, like it's super risky, then potentially reconsider and realize that it's not risky unless you're trading too large. But with discipline, it can actually be beneficial because it can allow you to sell strikes which are further out of the money for trades that have a lower probability of getting challenged.
Yeah, that's a key point. What you just said there, right? So it's about, the trader having discipline and being smart about it, right? And not overextending their position such that, if it all comes crashing down, it's really bad news. So, um, discipline is the key. I agree.
Awesome. So my last question is, where do you see your channel evolving or your strategy evolving like over the next few years,
Um,
or even personal changes or things like that?
yeah. So I think, well, my goal would be eventually, um, uh, walk away from my consulting job that I have right now. Although I do like the engineering work, I'm kind of getting burned out on it, and so the what I find a lot more interesting and challenging is the option trading. Um, I love the fact that I can produce videos showing my trades and share them with an audience, and some of my audience actually writes me back and tells me, I'm actually helping them out, giving them information, and explaining things, um, and don't get me wrong, I'm not. not giving any new information. It's just the way I teach happens to resonate with that particular viewer or set of viewers. And so they're able to glean information from that. And so I get a sense of satisfaction from that. Doesn't pay the bills, obviously, right? But I like the fact that I can be creating content from a YouTube channel based upon my option trading experience. So that being said, I want to leave my engineering consulting work. I eventually see myself moving into doing option trading full time. I think that'd be awesome if I could do that because I really do enjoy it. And as a part of that, growing my YouTube channel along with my option trading experience as well. So I see the two going hand in hand. Um, and not that I want to be a YouTube creator. I never set out to do that. It's just kind of worked out that I've got a following now, which is kind of nice, right? But really, it's more about being smart about option trading, learning more. Like case in point, we just talked about margins, right? I think if I quit my engineering job, I can dedicate the time to learn about margins, and I can go back and revisit credit spreads and debit spreads and figure out maybe a better way to do it. Because for me, it was like I said, it was very technical, and it took me a long time to really get it down. If I could streamline that process for myself, I think that would help as well. So I see myself evolving as an option trader, and then along with that, my content on my YouTube channel will follow along as well.
I think one major thing is it's just realizing when I used to work when I used to work as a banker and like hold other jobs. As I get older, I value time so much more. That's probably the most valuable thing that I have. I value time much more than I value money. And in the past, when I was much younger, I valued money more than I valued time. And looking back on it, just like getting dressed and shaving every day and putting on a tie. And then, even though I lived in New York City and I could walk to work, many people, they travel to work and it takes them like a half hour to get there and then a half hour to get back. And then there's a lot of time that, you're taking like a lunch hour just to like decompress and de-stress. But really, like when you're working on like a YouTube channel and you're trading, really like all the time that you're dedicating to it is very high leverage time where you're getting results, right? So
Right.
when you're making a trade, like you're just scanning something and then you're making a trade and then boom, you just wait and it either expires worthless or you take assignment and then you sell a call and then it's done. You can trade and be very productive and efficient with your time in just like a few hours a day. But many people, they waste a few hours a day by working and I'm not saying that they're like working. I think as a young person, when you work for someone else, you're kind of like learning from their mistakes. And I think it's a great opportunity. But for me personally, I just like, it's just really, it would be very difficult for me to go back and like force myself to like, shave every day and like wear like really nice clothes and be judged by like small things, which I personally do not find them to be valuable, but which many other people do, especially like in corporate finance where you're judged on like really
Oh
small.
yeah. Yeah. So what you just said, that's great justification to have a watch list. Having that watch list and knowing your little universe of stocks that you watch, oh my gosh, you save so much time from that. That's a great example that you just talked about. And there's a tangent off of that. So right pre-COVID, when I was doing my consulting job full time, I had jobs where I would spend 1 hour traveling to the client site and 1 hour back. So that's 2 hours every day that I lost because I was driving. Oh my gosh. It's kind of a mixed blessing, this whole pandemic thing, but being able to work from home and like you said, time is so valuable that I think it's opened a lot of people's eyes. In fact, a lot of companies, to that point, are noticing that having the telework, the remote worker, kind of has helped them, right? They can reduce some of the real estate, right? They don't need as much office space, so they can reduce operating expense. I think there's still some question about employee productivity. There's that's a concern. It seems to be, but I
That's
think that yeah, but the trade-off I think is there, right? So if we have 100 workers that don't have to travel back and forth, not only is it good for those people because they save all that time traveling, but now the fuel costs go down, less carbon emissions, less real estate, less office space that needs to be rented. So I think this is a pivotal time in our history, and I think we're still trying to figure it out. But it's opened the door, and I think there's some great opportunities here. So I'm really looking forward to evolving myself as well.
And for the audience, before we wrap up, can you talk to them about like what your channel name is and things of that nature?
Sure. Yeah. So my name's Jim. I have a channel on YouTube called Simple Option Trading, and please stop by at any time. Take a look at my videos. I also have a Patreon, so I have a membership site that's also patreon.com/simple option trading. And over there, I share some of my trade information, my weekly stock picks. I kind of show what I'm doing, and not that I'm picking stocks for people, but I'm showing what I'm doing. So I'm revealing what my portfolio is and how I'm making my trades for the upcoming week. And then I also wrap it up. I give a summary on past trades. What was the outcome? Did I profit? Did I lose? What mistakes did I make? What could I have done better? Kind of thing. But yeah, so simpleoptiontrading.com. I'll be, for my viewers as well, I'll be sure you check out David. He's got a great site as well. I think, in fact, David, I love some of your videos. So I've been on and off watching your channel for a while, and when we connected, a few weeks back, I started watching you more and more, and so now it's kind of like the drug dealer, right? You kind of get hooked on it. And so I look forward now to seeing, the videos you release, and the one you talked about where you said, you don't do fundamental analysis anymore. I know exactly what you're talking about. So I watched that video because the thumbnail caught my eye, right? So the thumbnail and the title, it caught my eye. So it lured me in, and I watched it. So it was valuable. So I appreciate this time. I hope my audience members will also make sure you visit David's channel. David, please give me your name. Best Stock Strategy.
Yeah, my name's David Jaffe. That's my full name, and my channel is youtube.com/beststockstrategy. I offer education and also like a trade alerts product where you can try that. It's $19 for 7 days. Jim, I'll link to your channel and in the video, and then on your video, if you could link to my channel as well, that would be great. And I think that this was incredible. I think that our audience is going to find this video extremely valuable, and recognize that both of us are conducting this at 10 p.m. at night, because on the Eastern time, because we really care about you, and we care about creating valuable content for you, the viewers. So I hope that you found this enjoyable. Please like, comment, share, and subscribe. And if you have any questions for either of us, please leave a comment below, and I'm sure that we'll do our best to answer that question. And we really appreciate you, and we hope that you continue to grow with us as we continue to get better and improve.
Yeah, exactly right. So I hope my audience follows your channel as well. Subscribes to your channel, David, because like I said, I recently got hooked on it, and I think it's been very valuable. And I think my channel's here. I think yours is a lot more sophisticated than my channel. So for my viewers, so I have a lot of viewers that are the beginners or newcomers, but I also have audience members that are a lot more sophisticated, and I think will resonate easily with what the information that you're providing. So I think that's a great opportunity for them to get introduced to you and take advantage of it as well.
Thank you, Jim. All right, guys, that wraps it up. And once again, we appreciate your attention, and we hope you have a great day, and thank you so much.
All right, thanks, guys. Bye.